Is cash really king in a recession? Discover the top 5 assets that could outperform cash in the economic downturn of 2023. In times of economic uncertainty, investors often turn to cash as a safe haven. However, cash is not always the safest investment during a recession. In fact, it can lose value quickly due to inflation, leaving you with less buying power. That's why it's important to consider alternative assets that can retain their value or even increase it during a recession. In this video, we will explore the top 5 assets that are better than cash during the recession of 2023. So, without further ado, let's dive straight into the video. Number 1. Real estate. Real estate is often considered one of the best investments during a recession. While it can be a large initial investment, it has the potential to generate consistent, passive income through rent, and it can appreciate in value over time. In fact, real estate tends to hold its value during economic downturns because it is a tangible asset that can always be used or rented out. Investing in real estate can take many forms, from buying a rental property to investing in a real estate investment trust. A rental property can generate income through monthly rent payments, and as the property appreciates in value, it can be sold for a profit. However, owning a rental property also requires a significant amount of maintenance and management. On the other hand, investing in a REIT provides exposure to real estate without the hassles of owning physical property. REITs are companies that own and manage income-generating real estate properties such as apartments, office buildings, and shopping centers. As a shareholder in a REIT, you can receive dividends based on the company's earnings and may also benefit from the appreciation of the underlying real estate properties. When investing in real estate, it's important to consider the location and condition of the property, as well as the current market conditions. During a recession, it may be possible to find properties at a lower price due to decreased demand, but it's important to conduct thorough due diligence before making any purchases. Number 2. Precious metals. Precious metals, such as gold, silver, and platinum, are often considered a safe haven investment during times of economic uncertainty. These metals have been used as a store of value for thousands of years and have been known to hold their value during market downturns. During a recession, investors often turn to precious metals as a hedge against inflation and currency devaluation. This is because precious metals are not tied to any specific currency or economy, and their value is determined by global supply and demand. In fact, the value of precious metals tends to increase during times of economic turmoil as investors seek safe haven assets. Investing in precious metals can take many forms, from buying physical bullion to investing in exchange-traded funds, ETFs, that track the price of the metals. Physical bullion can be stored at home or in a secure vault and can be sold when the price increases. However, owning physical metals also requires storage and security measures. ETFs, on the other hand, allow investors to gain exposure to precious metals without the hassle of owning physical bullion. These funds hold a portfolio of assets, including physical bullion and mining company stocks, and their value tracks the price of the metal they represent. When investing in precious metals, it's important to consider the current market conditions and the purity of the metal being purchased. It is also important to note that while precious metals can provide a safe haven during a recession, they may not necessarily provide high returns during economic growth. Number 3. Cryptocurrencies. Cryptocurrencies such as Bitcoin and Ethereum have gained popularity as an alternative investment during a recession. Cryptocurrencies are decentralized digital assets that operate independently of governments and traditional financial institutions, making them immune to political and economic turmoil. During a recession, cryptocurrencies may be attractive to investors because they are not subject to the same inflationary pressures as traditional currencies. In addition, cryptocurrencies have the potential to provide high returns as their value can increase rapidly due to increased demand. Investing in cryptocurrencies can take many forms, from buying and holding the currency to trading on cryptocurrency exchanges. However, the cryptocurrency market is highly volatile and prices can fluctuate dramatically in a short period of time. This volatility can make it a risky investment for some investors. When investing in cryptocurrencies, it's important to do thorough research and understand the technology behind the currency. It's also important to store cryptocurrencies in a secure wallet to prevent theft or loss. While cryptocurrencies have the potential for high returns, they are not without risk. The lack of regulation in the cryptocurrency market can make it vulnerable to fraud and scams. In addition, the high volatility of the market can make it difficult to predict the future value of the currency. Number 4. Bonds. Bonds are a type of fixed income investment that can provide steady returns during a recession. When an investor buys a bond, they are essentially loaning money to a company or government entity. In return, the bondholder receives regular interest payments and the return of their initial investment when the bond reaches maturity. During a recession, bonds can be an attractive investment because they typically have a lower risk of default than stocks. This is because companies and government entities are often more likely to continue paying interest on their debt obligations than to continue paying dividends to shareholders. There are many types of bonds available to investors, including corporate bonds, municipal bonds, and government bonds. Corporate bonds are issued by companies and typically offer higher interest rates than government bonds, but come with a higher risk of default. Municipal bonds are issued by state and local governments and can offer tax benefits to investors. Government bonds are issued by national governments and are considered to be the safest type of bond. Investing in bonds can take many forms, from buying individual bonds to investing in bond mutual funds or exchange-traded funds, ETFs. Bond funds can provide diversification and professional management, making them a popular option for many investors. When investing in bonds, it's important to consider the credit rating of the issuer and the interest rate offered by the bond. Higher-rated bonds typically offer lower interest rates but come with a lower risk of default, while lower-rated bonds offer higher interest rates but come with a higher risk of default. In conclusion, bonds can be a valuable addition to an investment portfolio during a recession, providing steady returns and a lower risk of default than stocks. However, as with any investment, it's important to do your own research and consult with a financial advisor before making any decisions. Number 5. Stocks. Stocks are one of the most popular types of investments, providing investors with the opportunity to own a share of a company and potentially profit from its growth. During a recession, the stock market can be highly volatile, with prices fluctuating rapidly based on a variety of economic and political factors. While stocks can provide high returns over the long term, they also come with a higher risk of loss than other types of investments, such as bonds or real estate. During a recession, many companies may experience financial difficulties, leading to decreased earnings and lower stock prices. However, investing in stocks during a recession can also provide opportunities for value investing. Value investors look for stocks that are undervalued by the market and have the potential to grow in the long term. By buying stocks at a discounted price during a recession, value investors can potentially profit when the market recovers. Investing in stocks can take many forms, from buying individual stocks to investing in a stock mutual fund or exchange-traded fund. When investing in stocks, it's important to consider the fundamentals of the company, such as its earnings, revenue, and debt levels. It's also important to diversify your portfolio and avoid putting all your eggs in one basket by investing in a variety of stocks and other assets. Overall, stocks can be a valuable addition to an investment portfolio during a recession, providing the potential for high returns, but also coming with a higher risk of loss. By doing your own research and consulting with a financial advisor, you can make informed investment decisions and potentially profit from the ups and downs of the stock market. In conclusion, by diversifying your portfolio and investing in a range of assets that are better than cash, you can protect your wealth and potentially benefit from economic downturns. While all investments come with risks, it's important to do your own research and consult with a financial advisor before making any investment decisions. We hope this video has provided you with valuable insights and information about the top 5 assets to consider during the recession of 2023. If you found this video helpful, please give it a like and subscribe to our channel for more informative content on finance and investing. Thank you for watching.